Welcome back, Powell crew. I'm Tom Crown. This is the home of the FOMC. We've been covering these for years. We were the original channel to do so, and here we are, years later, still doing it. Awesome to have so many people tuned in, locked in, waiting for Powell, waiting for the spice. We've got a lot going on today. It's going to be very interesting, really regardless of what happens. I heard rumors that over the weekend, they found the data. However, I heard further rumors that it wasn't the data they were looking for. So we'll find out here today. All signs are pointing to no interest rate hike today. If we look at the Fed rate monitor tool, I won't even pull it up. It's like 99.9% no pause. So basically, we're going to be watching the chart. Let me pull this up. Nope, not that. Nope, not that yet. Here we go. We're going to be watching the chart. We're going to be watching Bitcoin, the dollar, gold, S&P 500. We have a good amount of time until we actually hear from Powell, so we'll have time to go through some charts, some TA, some goodies. We'll be taking requests. Here's the schedule for today. We just went live. If you're watching this after the live, skip ahead about an hour, and you'll be at the interest rate decision an hour and a half to hear Powell live. So at 2 p.m., the interest rate decision, for whatever reason, is published to news sources, maybe so they can insider trade it before we can. That'd be my guess. So at 2 p.m., we'll find out. And at 2:30, Powell will join us, and we'll be hearing his remarks. We've been covering him. A little bit sus, I will throw this out there. We tried to cover him last week at the Maloney whatever award ceremony. Wasn't broadcast live. The only time I've ever heard him speak and it not be broadcast live. So, little sus. What were they hiding? Were they hiding the data? Were they hiding Gina? That'd be criminal. Don't hide Gina. Hopefully Gina joins us today. Oh, Gina. My love. Hopefully. We have a lot going on the charts for crypto, and it does kind of look like we might be seeing something interesting going on for the rest of markets. So really quick, let's zoom in. Earlier today, we had Bitcoin almost kind of, you know what? This is a take I'll share with you guys. We did see a new yearly high. Today is the first day in November, so we've broken October's high. But we had this high and we fell down very quickly. And what's interesting here is for those of us who've tuned in month over month to watch these streams, to watch the FOMC, guys, doesn't this kind of look like the price action that we expect on the FOMC during the event? It's a little weird. We've never seen this happen before. I will say that on a very low time frame, Bitcoin trending down, very low time frame. We're talking minutes here, trending down into this announcement and into the speech. However, this is the trading pattern that we've developed, we've observed over the course of these, and that's basically Bitcoin or whatever asset, Bitcoin trading sideways. We typically see a move in one direction into the interest rate decision. Then when the decision is out, we see that move reverse. And then as Powell starts speaking, we usually see it return right to that mean, right to where it started. So this is kind of weird. We've never seen this happen before the event. This is almost always directly in the event and during these times. And you can set your watch by it. It's pretty wild. Before we get too deep into charts, into TA, into trades, I do want to say the same thing I have to say every FOMC meeting, guys. These events can bring extreme volatility. There is a lot of risk going long or short on leverage today. Spot, obviously a little bit less risk, but I don't recommend opening positions. And honestly, not financial advice, I do recommend most of the time closing your positions into these. As we just kind of talked about, that whipsaw price action tends to stop out shorts and longs before returning to the mean and being pretty unspectacular. But that basically means if you have a long or a short, your stops are likely being targeted. Liquidity sweeping right at these events, very, very common. Don't get caught. Practice safe risk management. You don't always have to trade. Don't force trades. It's okay to not be in a trade. It is. Really quick before we get too into it though, volume good, sound good, music volume good. Nothing weird, no lagging, no dropping frames, hopefully. We've got quite a few people all here already. We just went live 60 seconds ago. We've got about 600 people here. Those numbers will get up. We will see over 1,000 today. I guarantee it. I guarantee it, baby. Real quick, can I get a chirpow in chat? Who's excited? Who's excited for chirpow? Show me you're excited. Put a chirpow in chat. A little bit of chirpow. If you got a membership, you can use the emojis. If not, you can just type chirpow. That'd be fine. I guess the poll went away, which is very odd. I had a poll up. I'll put it back up here. Let's actually put the schedule. 2 p.m. Interest rate. 2:30. Sure. Pow! A Chairman Powell. A chirpow. Guys, just anecdotal here. Are you all now incapable of saying Jerome Powell or Chairman Powell? I found that I can just no longer say it. Like in normal conversations with non-crypto people, I'm like, oh yeah, chirpow will be on. And people are like, what? And I'm like, oh yeah, I forgot that's something we made up. My bad. Okay, getting this back up here with the schedule so those tuning in don't feel lost. There we are. And let's put in the choices. Delicious nothing burgers. Chirpow does have a very... he's a little biased. He loves delicious nothing burgers. He's not a vegan. Let's say vegan bear beans. And... buttery bull biscuits. There we go. Buttery bull biscuits. There we are. Basically, the poll is just, are you hawkish, dovish, or nothing? That's really what it is. But answer it how you want. It's just for fun. I see a lot of chirpows in chat. I love it. Same FOMO sapien. I know. People like look at me like I'm crazy. Like, what is chirpow, dude? What are you talking about? And I'm just like, you're not cool enough to know, bro. Man, we got a lot of names here. A lot of people in chat. I love it. What's up, 420 Bud Monster, Alex, New, B Cashy, Big Don, Bajorn. Where's Bajarki? We miss you, Bajarki, if you're out there. Brendan, Brucey, C. Ron, Caveman, Caputa, Chaotic Rage, Chocolate, Butsonator. I like that name. Chaotic Rage, Clifford, Jorgensen, Kodan, Cody Codes. What's up, Cody Codes? Still spinning them. We should have you come DJ live for one of these, dude. Cody's a cool, good DJ. I follow him on Instagram. What's up, Craig Bowen, Crypto 420, Crypto Fan, Dave Digital, Digital Asset DGen, my guy. How you? DJ Monty, Does It Matter to You? Crypto Brando. What's up, Crypto Brando? Donato Cabrera, Dr. Crypto, Destructive, Elliot Palasanio, Enso Mining, SHD, Ethereum Killer, Fafa, Fofi, FOMO Sapien, Gabe God, Casper, Georgios, Official, Hersey Bang Beats, Illo Gick, I Need My COD, what's up, bro? It's Autopilot, how you doing? Jay Baker, Jesus Sard, Joey Daniel, Johnny C, Japernicus, JT Bitman, JT Jesus, Kelly B. What's up, Kelly B? Representing the ladies today. Creek on Chris Pax, Loading Name, Lolo, Sumanth, how you doing, Sumanth? Mad Cow, Manifesto, Matthew Barnes, Moggy Games. Dude, I can't even get through the list. It's updating so fast. I'd love to see this hype. Keep smashing the likes. Keep subscribing while we're live. Keep engaging with the live stream. YouTube will then show this chirpow stream to more people and we can grab more fam. What's up, Mr. Andy Walk? Name here, Nate. Quantum Nate. NBF Forum. Nicholas Arena. Oh no, Y2K. We got Steve. Optical Art Steve in the house. We've got a chart for him we're going to take a peek at before the interest rate decision. What's up, Paul Wood, Pepito, Plain, Prolific Joints, Randy, a big Redman, Ricardo, Rick, Rising Sun, River, Ryan McEarchin. I should just do first names now. Ryu Kendon, Sanket Kutwal, Scott Cusack, Seek and Hunt, Shizzy, Silent 45, Skateboarder 3 Web, Soldy, Sports Real, Stainless Steve-O, Steph Meets, Sticks 96, Storming the Castle, Street Smart Money, Sunny Singh, Super Macu. Dude, this is a long list. I love it. Squash Buckland, Scallywag, Swing Trade Brigade, Thomas Aches, The Pickle, my right-hand man, Tillin McPooch, Tito Gaines, TJ Welch, Toby McDonald Woodlands. I like that name. Touch Crypto, Typical Dave Up and Run, Vanessa's here, Venom Hex, Vince Vishart's Wotashi, Weaverton, Mendez, Wick, Monkey. I missed whoever said something in between when I started that to finish that. Likely I missed you. I'm sorry. Shout you out, bend over. You'd like that, wouldn't you, buddy? We finally going to 10K today? I don't know. Jonathan, 10K today? That seems a little big to ask. What's up, Ashweni? Sol. We'll look at Sol. I got some charts pulled up. We'll definitely look at Sol. INJ hitting targets. What else is spicy? XRP hit targets. There's probably more. What else is there? What else is there? The dollar making some moves today. Near protocol. Gas. GFall. Ripple. Cyber. Rollbit. IMGNA. I don't know what that is. Algo. Bencoin doing something. Ravencoin. Gala. Render. We got. There's a lot to look at, fam. There is a lot to look at. There's a lot. Let me see really fast here. Somehow I can't find the one chart. But our in-stream, no, that wasn't in-stream. That was actually on Twitter. You should follow me on Twitter. Long hit. Short from a long time ago. We placed chillin' here. We did see the wick higher this year. 35,187, just a slightly higher high. Filling that short, falling back down. I shared these on Twitter, not on the last live because they weren't a live stream trade. The last live stream trade did hit though. Oh no, I just opened Discord. Please don't crash my computer. Please don't crash it. Please. Oops. Ooh, that music's a little loud. Let me turn that down. I can see it. There we go. Is that fine? Discord is like mulling over. It's like, do I want to ruin the Chirp House stream? Do I want to crash it? We'll get into Steve's chart then. Let me see. Hold up. This is a really good time to smash likes and subscribes. Just saying. Okay, that was also a tweet. These were done after the live streams. Tweeted this, long from 34.5, 35K, take profit, hit, done, easy peasy, cheesy, shared the P&L on the tweets. All right. Refreshing the chat. It's already so backed up. Holy shit. Show the rings. I think they will pause for now. That does seem likely. If BTC crashes, what's the target? I mean, 30.3, great downside target. That is the target of, God, I gotta organize better. That is the target of this short we placed about maybe a week ago. I don't know. 30.4, 30.5, around that area. That would be a great place to back test. Definitely not guaranteed. We're going to go through more. We're going to go through the charts then. As we have been of the opinion, still are, the 200 weekly moving average is really where I am looking as my baseline to remain as bullish as I am. If we trade back below the 200 weekly, I'm going to start leaning into the bear side. You don't see that often. That's at 28.5. So really, Bitcoin can retrace a lot from where it is and still not really impact the chart much, not really be a threat, not be concerning to me. Let's turn this back. There we go. Gold moving down. That is a little worrying. Let's take a look at gold here quick and the dollar, because these have been very spicy charts. Did that not load? These have been very spicy charts. Gold, in my opinion, being the most spicy. Maybe equally as spicy as Bitcoin lately. Let's get rid of stuff. There we go. Gold rallied basically to a new year high, right? Nay. We already had an all-time high here in gold. Gold rallied to 2,000 last week, looking hella strong. Here's a little bearishness I'll put in the mix. Gold now retracing. It hasn't retraced to a level that's concerning. Hasn't fallen out of the sky. Maybe just looking for a back test of these previous highs. That would be a great place to bounce. But if it doesn't, gold basically was a leading indicator of this Bitcoin rally. We looked at that, I think it was Wednesday or maybe it was last Friday. I'm losing track of time. Gold was basically leading. Bitcoin was following. That's when we saw our breakout to 35K. The problem is gold now kind of trending down, not as confident. If gold was pushing up to new quarterly highs, we'll say, or pushing back up to its all-time high, if it was setting higher highs, I'd be more confident that we're looking at a rally today. At this moment, gold not looking super strong. You can see this is like a strong high here, rejection, And then you got a wick to that previous support, rejected again. It is holding its lows for now. That might change during this FOMC meeting. We might see this dump. Gold's going to be a really good indicator during this FOMC meeting. I'm going to put an alert really close to price, just at today's low. I'm actually going to put one right here to this high here in November. Breaking in either direction, likely a very good signal for Bitcoin of which direction it's going to go. That would be my 2-cent take there. I do want to go to the dollar. I did get an alert on the dollar. However, I think it's getting sold off. Maybe not. No. Okay. I saw this candle earlier. I thought maybe it still was. Gold did reach up to a new high. Did reach up. Let me see. Is that a yearly high? No. No, of course not. I'm still getting my bearings. October 2nd. Interesting. October 2nd, the dollar put in its high for the year so far. Now it's November 1st. We have 2 green candles in a row. Closed out strong October. November 2nd is tomorrow. Maybe that's just coincidence. Maybe that's just coincidence. The dollar is looking pretty strong here. This is looking like some kind of continuation to me. Lower lows, lower highs. You broke that. Now you're setting higher highs and higher lows. Maybe a little cup on a handle. I don't know. Target to the upside though, 109. In that event, likely to see some downside pressure on equity, stocks, commodities, crypto, etc. If the dollar falls, likely to see a little bit of green. Around. An interesting thing that we noted on a stream recently, I'm just going to say, because I don't remember if it was Wednesday or Friday. When we saw gold rally and Bitcoin rally, we saw a really interesting, I don't want to say decoupling, because that means, I think it was coupled. I don't think they were ever coupled, really. But we saw something interesting where the dollar was trading sideways, gold was rallying, and stocks were dumping. And that was a very strange setup. You don't typically see that. Usually, if the dollar is moving down, we see stocks gain, and we see gold gain. But if we see stocks dumping, we usually see the dollar rallying, and we usually see the gold moving down. We got basically stocks saying dollar is strong and gold saying the dollar is weak, while the dollar was just sitting sideways. It's very weird. I'm not sure I've ever observed that exact correlation before. Should be interesting. Should be an interesting day. Calm before the storm. As soon as we went live, sideways candles. That is a great thing about our channel, guys. Whenever we go live, price action just freezes. And so if you ever panic, just tell me to go live. I'll freeze the market for you. Don't worry. Chronos will be very big soon, says Jake. All right. Chair Powell. What's up, Confident Podcast? Terrific. Good to see you guys. Let's get 420 likes. Nah, let's get 4,200 likes today. Mayan Soul. I have like some soul. I'm not long in soul here. You have to be a wild child, in my opinion, to long soul here. Let's do this. Let's look at the Bitcoin monthly close. Let's look at this first. As we get into the cryptos, into the real content, before the real content. October wrapped up at 34.6. What a close. What a strong close. Absolutely beautiful close. That is a 28% monthly candle. That is the largest green candle Bitcoin has seen since January of this year. Hella spicy. Hella spicy. Ooh, money flow still tracking up on the month. That is great to see. Beautiful. MACD momentum, we see buying momentum increasing on the monthly time frame. I like that. I like that a lot. No bearish divergence on our highs. Unusual, but very welcomed. We have a higher high in price and a higher high in RSI. No divergence there. No threat. Let's go to this week. Weekly closed very strong. Not a lot of progress since then. Basically trading sideways. We did see a higher high in November versus October earlier today, as I repeat. But this weekly candle, very much undecided. We haven't seen a large retracement. The most obvious area where we would look, said this a little bit earlier, but this 34, 36 range here, the previous resistance that we were under all year was broken. We have no back test. Back tests are not guaranteed, but something like that would be a very healthy move. I wouldn't put my money on that, though. I wouldn't bet on that. I might take a long from there, but I wouldn't. Literally, I would bet on it, but I wouldn't bet on it. But literally, I wouldn't bet on it. Would be not a bad place to go. Let's update this too. So, Months ago, you guys heard me start yelling about the first ever Bitcoin golden cross. It was very far away back here, as the 50 and the 200 weekly moving averages were basically moving parallel. They were very, very much not looking to cross for a long time. But we did say, if we see trading above this yearly's high, what will happen? The 50 will start accelerating. We'll start moving to the upside. And here we go. We got that, it looks like on October 16th's close. You can see the 50 weekly here starting to point up. This is very interesting because what was once very far away in just 2 candles is now much more imminent. Much more imminent. I did tweet about it, but I think that tweet is like buried for some reason. I don't know. If we look at these new trajectories, we get a much closer date, which is very spicy. Once I show you, it's very spicy because you'll see it's not just any date. It's not just any date. Right here. Right here. Instead of it being, I don't know, I think it was like November next year or something, like another year away, this weekly first ever golden cross on Bitcoin is now projected at this course for the first week of January in 2024. I'm not going to make any conclusions here. I'm not going to tell you that's bullish or bearish. We've never seen this before. The first ever Bitcoin weekly death cross back here in February really didn't do anything. We saw like a wick low. Didn't do much. First ever golden cross on the week coming up potentially the first week of January. No one knows what's going to happen. Nobody. Very, very spicy, though, to see that accelerate to follow. This date is pretty much locked in. There's 2 possibilities. If Bitcoin moves higher to say like 48K, this will likely accelerate and happen before then. If Bitcoin comes back down to these highs and holds, probably will still be right around that time period. However, if Bitcoin falls below the 200, which is, as I said earlier in many streams before, where I'd get kind of bearish short term, or even maybe a little longer than short term. If it falls below the 200, or even worse, the 50, this cross then will start moving farther away. We'll see the 50 flatten out, and it will basically bearish kiss there. I would get very, very bearish personally under 25K right now. Under that 50 weekly, things get very ugly. But we are very far away from there. It's certainly possible, but we're not really there yet, right? We're going to take this one day at a time. We're live here Monday, Wednesday, Friday. More than that, we're live here all the time, and we'll be covering it day to day. Day to day. That's some alpha lineup with your cycle pivots. I don't know, man. It's pretty spicy. Weekly's looking good. Money flow at a higher high. Momentum still moving up. Now, we looked at this on Monday. VWAP pointing down on the week. Not ideal, but it was Monday, so we said there's no point of counting this. Price really hasn't moved, so at the moment, I'm not going to really factor that in. If we see price start to move to lower lows on this week, I'll accept this more as a confirmed signal of retracement, but we don't have it yet. Let's go to the day. Let's go to the day. The Dizzy. The Golden Cross happened. What was this? It was like October 30th. We had our Golden Cross. Kind of weird. Kind of weird. Lots of opinions about that cross. Lots of opinions. We talked about it in depth. Nothing's happened. I myself was pretty much looking for a retracement, right? Typically, we're very far away from the cross. It's underneath us. We had a run up. Retracement back near, to or near the cross is pretty standard. Nothing's happened. Some people thinking that it was going to be super bullish. Nothing's happened. It's interesting how Bitcoin has this habit of making both sides of a trade wrong. Like everyone was convinced it's either going to retrace from this or it's going to pump from this. And just the thing no one expected, literally nothing happened. Bitcoin. The daily is looking better than it has. Money flow hitting a higher high here. Momentum still coming down, and VWAP not really desirable. A move up would really quickly snap this back into place. With that said, this is still a very bullish outlook, even if we do see a retracement. We're hitting higher highs here. versus our previous positive money flow. Momentum is building. We're going to need to see, like I said, significant downside trading to change this. It's looking pretty good. I'm going to read the chat in a minute. We're going to look at altcoins in a minute. Let me just... Ooh, that's a little threatening. A little threatening. TK on the Ichimoku Cloud Daily snapping up to price. I don't usually like that move. Don't usually like that move. The Kaijun sitting right down here in our retracement target zone, being just dependable. The dependable Ichimoku Cloud, man. Looking at the week, we did get our bullish cross, the most bullish signal that Ichimoku Cloud is capable of producing. We got a cross up above the clouds. This has not happened since back in October 21, where we did go to a new all-time high that didn't really get us too far, but that was the last time this happened. Before that, what I believe was back after the March 2020 crash. We are outside the clouds. We are soaring. The TK and KJ sitting right about at that target 30.2-ish. Everything, it seems, pointing to this low, like 30 point something. Pretty much everything. Very spicy. Very spice. RSI not really doing much on the day. Momentum on the day, to be fair. Buying momentum has waned off since the 25th of October. Less and less buying momentum, according to MACD. And can suggest you're looking for it to roll over. 12-hour momentum selling, increasing selling momentum. Candle after candle, since right back here, does not seem to be impacting the chart quite yet. 12-hour does give us some rollover signals from positive to negative money flow typically. However, VWAP is now at the zero line. Momentum not quite pinched, but looking to pinch. A strong 12-hour close in 6 hours could make this look very good. Right now, it looks retracey. Doesn't look dumpy. It looks retracey. But a strong 12-hour close, like I said, 6 hours, or even in the next 12 hours, could make that look really good, really fast. Let's look at like the 6. RSI coming down with our lows coming up. That's all right. Ooh, this is actually a really nice looking take. So I see something that we love on this channel. One of our most confident, highest hit rate patterns does seem to be painting here with this wick. With this wick today. Flat top, 34.6-ish. You can really have some wiggle room there on where you think the flat top is, but 34.6 looking right in my eye. 1, 2, 3, 4, 8, 9, 10, 11, 12, now 13 tests of 34.6 on the 6-hour time frame. Each time resistance is tested, it is weakened. As long as our lows continue to come up, this is looking for a break again to the upside. As long as. That's a big if. That's a big if. But that looks really good. I like that. 6 hour. This is some very odd momentum, but I don't hate it. Looking all right, actually. Same thing on the 4. Very odd momentum, but money flow still looking all right. 2 hour, 1 hour. We're seeing really intense coiling. On our oscillators, our lows are coming up and our highs are coming down. And what we really can what we can get from that isn't necessarily a direction, but we can say that volatility is building, potential energy is being stored up, is being bottled up until it explodes out in one direction. That's usually how I look at it. Bollinger Bands on the 4 hour, or on the 1 hour, getting very tight here. 4 hour pretty tight there. Look at this 15. Ooh, expansion on the 15. I don't love that. All right, let me wrap this up so I can take a peek, see what you guys are vibing at. 1 hour does not look as strong as I'd like it to. Okay. Same on the 30. 15-minute looking to roll over, but does appear like it needs a little bit more downside. Another higher low on money flow on the 15 and it will finally look to roll over. 34.3 maybe. All right. 0.5 retrace. I don't really like taking positions from the 0.5, but with the rest of the setup, I kind of like it. Kind of like it here. I almost don't want to place a trade today because of what I said in the beginning, guys. These are extremely volatile events. They're not good to trade. I'm going to place it, and then I'm just going to, like, get rid of it so people aren't thinking about a trade today. There we go. It's like a 2.5 to 1. Targeting the lows here. I like that. It's not bad. Not bad. Not bad at all. Flat top, ascending low pattern on the 5-minute right there. Broke to the upside. Probably about to see something similar here, I would guess. There we go. Something like that. We'll find out. We'll find out. All right. All right. Let's see. Let's check our time. It is 1:30, so that means we have less than 30 minutes until the interest rate decision is in. Bitcoin trading pretty sideways. Gold trading pretty sideways after selling off from its daily high here. Stocks, same thing, but stocks kind of look like death over here. This is the 5-minute chart, so don't think this means they're going down forever, but this looks pretty crappy on the 5, doesn't it? That looks pretty crappy. Stocks definitely looking weak there. Dollar showing some strength, retracing back to its highs. 5-minute in a clear uptrend. The dollar looks like it wants to retest, if not move higher today. Not going to lie. It looks like it wants it. Giggity giggity. Just like your girlfriend. All right. Just kidding. Your girlfriend does not DM me. She does not. G-Fall already pumping. Let's look. Does he have any open positions? Pedro, I have irresponsibly open positions, my friend. Irresponsibly. Let me, I can pull some up. Uno segundo. I actually like this playlist, not gonna lie. It's just no copyright sounds. Good stuff. All right. You'll see me trading on FEMX, by the way, guys. They are our sponsor, FEMX. No KYC, one of the best exchanges out there. Love them. Personally, have used them for years. Here's one position I have open. It was long from 27. Realized about $2,000 in profit. It's up still about $5,000. Not doing too bad there. That one's been open for a long time. Here is a bunch of trades actually that we made back when we were doing the You Choose the Trade. We'll probably do that again in the future. These are all trades you guys told me to take, by the way. A few of them were like liquidated and stuff. So don't think these are all winning. But doing all right. The long from 26.4 looking good as well. These have been open forever. I don't really care about them. Over on FEMX. Over on the Phoenix. Here we go. Ape long is up 122%. The forever, I finally figured out how to take a little profit on it again. The forever long that's open since 16.5. It's basically just my flex. Don't do this at home. 3,700 realized, 4.5k unrealized. Just cruising at altitude. These positions are killing it. Not gonna lie. Not gonna lie. All right. Pepe, let's do this because we're gonna have a million requests today. I just accidentally typed in Pepe into my search bar instead of CoinGecko. There we go. Let's see what's actually moving. Uniswap with an interesting hourly candle there, taking the lead in the top 100. 2.2% gain over the last hour. Solana, jeez, we're gonna go to Solana next. We're just gonna go to Solana now. All right, Solana. Absolutely cruising. 4 days in a row here. Did not have much trouble at $32. I was thinking probably retrace higher low to be safe, retest previous resistance. Didn't happen. Solana had other plans, reaching up now to the $47, $48 target that we've had for quite some time. Quite some time. What will happen there? I don't know. I don't know. Does it have what it takes? You guys think it has the juice to just like ignore resistance? Looking left historically, this is a significant point of resistance / support for Solana right here. Background. Do this. Significant point of resistance and support. Resistance on the way up, support on the way down. I'm not convinced it has what it takes to just blast through it. Doesn't mean it has to stop there forever, but I'm not convinced. You guys are welcome to have your own opinions. If you think it's going to continue up and just showstopper everybody. $75 next upside target. Previous support after its all-time high. Dead cat bounce into the lows. That's where I would aim. Personally, I think going long right here today at $42 is a terrible idea. It does not fit the way I trade at all. However you do you. Please be safe out there. I would recommend, not financial advice, but personally, I would feel much more comfortable at $32 at a long, even more so at 25 down here at untested support. There are no guarantees that it ever gets there, but I think the odds of it getting there are better than the odds of you successfully making a long right here at $42. Be careful today, fam. Be careful out there. Longing the top of rallies is a great way to lose your pants right before a bull run. Something I do want to look at for Solana here, funding. This is why I also would not recommend a short today. Typically when we see these candles, I say, well, we can look at a short. We like to short resistance, long support, etc. Someone in the Discord earlier, by the way, join the Discord. It's a great community. But I was like, I don't know, man. I don't know. I'd probably wait for like 48. Solana funding, crazy negative. I wish Bitcoin funding was like this right now. 0.05 on Binance, negative 0.05 funding on Binance for Sol. That is absolutely bonkers funding, especially for Binance with the liquidity they have. What this means is that if you go short right now on Solana, you are very much joining the crowded side of the trade. Shorts are so crowding the trade that they are paying longs to stay open to the tune of 0.15% a day. That is a lot. That is a ton. That is really, really negative funding. It might work out. I don't know. But I don't think that's a good bet. I do not like joining the crowded side of the trade myself. But upside target, 47, 48 bucks. Very good one. Very good one. Solana has looked bullish all year. We talked about it on the last stream. If you want to hear my thoughts, I'm not going to go over those today again in stream, but go back to last stream. Check it out. That'll give you an insight on kind of why I think this is pumping, the potential warnings or cautions ahead for it. Don't get wrecked, fam. Bitcoin not moving. Excellent. Excellent. Get rid of these. Let me see if anyone's subscribed yet. Hopefully someone out there. Yeah, we got a ton of them. What's up, T-Faro57, Joshua Rockhold, me, Saw. Lucky Thoughts became a member. Nice, brother. Welcome to the fam. Melikshir Maya subscribed. Sam Undin. Daja Kuoka. Can't pronounce that one. Sorry, man. Brian Smith. What's up, Brian Smith? I can do that one. Mohammed Rezik. Dave Digital getting the membership. The gift me membership. Robin VDL. Blankaja Productions. And I know many more are going to subscribe today. Join our fam. Hit that button. Join the Discord. Enable notifications. You know the jam. You know how we do. We've got 10 minutes until we need to prepare for the interest rate decision. So tell me right now, what else do you want to see? What else do you want to see, guys? Tell me. Near, I did get an alert for Near. We have to look at Optical Art. Optical Art just subscribed. Wow, I'm honored. I'm offended that you weren't subscribed this whole time. Steve, Optical Art is the yin to my yang. I'm always bullish, and he balances me out. Great dude. knows his stuff. We disagree on some things, but that's okay. We can be friends. We're in crypto, guys. This is my favorite thing to preach about. We have enough enemies. Let's be friends, even if people disagree with you. Go subscribe to him. I'll put his link in the chat. Great guy. Been on YouTube as long as I have, just putting out the good content back when nobody was making good content. Great dude. Here's one of his charts. As you can tell, his TA is definitely more colorful than mine. Steve wanted me to share this chart. He wanted me to share this chart, and I'm in the zone right now, so I'm a little. Let me see. Basically, if we zoom out on Steve's chart, he is a fan of the fib rings, and this is another thing we disagree with, but that's okay. He doesn't do TA the way I do it. I don't do it the way he does it. That's fine. Using the fib rings here. You know, there's stuff going on. Let's actually do it this way for a minute. He sent it to me so I can edit it, which is really nice. So that way I can do it in a way that I see easier. There we go. Getting rid of everything. Steve's hypothesis is that the blue rings pump. And looking back, that's pretty good hit rate. The last two of these did lead to pumps. His hypothesis also sits with the orange rings being dumps. Looking back to the last two touches, that's pretty spot on. Steve is basically looking at this, and please chime in, optical art brother, if I miss it. Basically saying that at the moment we're kind of in contention here. Below the blue, above the orange. Bitcoin trading down to lows, which is really interesting that this circle lines up really well with what I went over earlier on the stream, my terms, my validation of becoming bearish. Very much line up with the price here. Looking for more downside if we hit the orange ring. If we manage to stay above it, break through the blue, Steve's looking for a pump a rune, and basically not 100% where I'm at, exact number wise, but very close. Looking over here to, what is this, May of 22, right around here, 40-ish K. Steve's looking for a bullish break if Bitcoin avoids the orange, breaks through the blue, looking for more upside. I like it. I like it. He has some other targets and numbers mapped out here. This ascending channel here, looking at 35.80. I think that was the previous high. 33.867. I think he's inferring a break here, looking for the next supports. 30.6. That's where we were looking on the stream, right in that zone. Steve, tell me if I missed anything, brother. Tell me if I missed any of your goodies, any of your goodness. I'm gonna flip this back as we are approaching our time. We're approaching the time, fam. There we go. Dollar stalling out a little bit here as Bitcoin is warming up. Maybe, actually that is already breaking this hypothetical triangle. It's already invalidated it, basically. Not bad. One sec, Steve. I feel like you said something. I'm liking that. Perfect. Hey! Yeah, he sent me the chart beforehand, so I had time to, like, look at it myself. It helped out. This is a weird game of Snake. Hey, guys. I say this all the time. Maybe not as much lately. There is no one way to do TA. Don't judge someone's TA just because it's different than yours. Look for the marks of a good trader, of a good analyst. Invalidation, validation, confluence, reasoning, evidence, right? It doesn't have to look like yours. In fact, if it looks exactly like yours, you're probably wrong because that's probably the way everyone's looking at it, right? Gina wanted to let me know she's bullish. Oh, baby. Oh, baby. Oh, boy. Gina's bullish. She is my dream girl. Oh, Gina. Gina, where are you? This long is playing. But not fast. Not fast. Gina. INJ. INJ doing things. We had a really solid 85% trade on INJ. It did move past resistance, reaching up to $15. That's where we were looking for a potential short here. Looking to the left, that was the highs that rejected price into the bear market. Logical, strong point of resistance. Going long here, very risky in my opinion. But if you are FOMOing, I would always caution you not to FOMO. whether that be in greed or fear. Take a break, walk away from the chart, come back. But if you are, $25, basically the previous all-time high, or the current all-time high, be the next profit-taking target. That's a big upside. We have seen coins like Solana, we just looked at it, pretty much ignore resistance and just move up to the next one, doing what I call a skip. It is possible. It is possible. But I don't like betting on them. They're not good bets. I don't really think I even own INJ, honestly. But this chart looks very solid. Here's the chart. If we invert it, all of a sudden your brains probably light up and say, haha, head and shoulders. You're not wrong. It's the big old dongler. It's the dongler. Inverse head and shoulders. Back to the all-time high. I mean, if this happens, I think that would be insane. I think we probably see something more like this. But if it happens and it breaks the all-time high, I'd be watching for the previous all-time high for an entry instead of chasing price up. It is better to miss the boat than board the Titanic, says one of our dearest members who haven't seen in a while. If you're out there, brother, we talk about you and think about you every day. Hope you're doing good. You're trading this? F that. Get it, joints. Get it. I gotta say it to be responsible. I don't typically trade them. I don't recommend trading them. But you guys do as you do. If you are going to trade, feel free to sign up with FEMX. Links in the video description and in the chat. Use my link. Fed interest rate in 12 minutes. That's right. That's right. We got a few minutes to go over some more alts. And then shit gets real, boys. It is Chirpow Day. It is the day of the Chirpow. Solana now the biggest gainer here as it's reaching past 42. Let's see. Yep, put in a new high while we were talking. Not much to like talk about here. Solana does not have, at least from my stance, significant resistance till 48. That's why it's been our next upside target after 32 broke. I don't see a lot in the way. Doesn't mean it can't do this. Doesn't mean it can't do stuff like that, stop out longs. But it looks pretty clear to sail up to 48. Pretty clear. What else is moving? Uniswap still holding its gains. Roll a bit holding its gains. Let's pull up some of those and just really briefly look at them here. I don't think I've looked at Uniswap in forever. With good reason. With good reason. Uniswap might be the second largest gainer on the hour here today. But it isn't doing anything. Hasn't broken its high. Just really in this zone, in this support zone. Battling it out, bulls and bears. Trading above $4.50. I'll get excited about Uni. Be looking for $5, just a 10% upside. But until then, nothing really happening. I will say this low here looks pretty good. This low here looks pretty good. We do have what appears to be a broadening falling wedge. We have bottom touch, top touch, bottom touch, bottom touch, top touch, bottom touch. We'll use our imaginations and say top touch. But the interesting thing right here, this reminds me of another chart that we'll take a peek at. Higher low. Higher low after a top touch. This is what we might be looking for. If you see rejection at 450-ish on Uni, you're looking for the bottom of the wedge again, likely down at, what, June's low, 350. With the way the market's trending, I think this is more likely. But be careful, guys. I am not always right. If you blindly follow what I say, you probably will lose money. I'm not going to lie. I hope that you can take my value. Whatever value I can offer, I don't even know what it is. It's unique to everybody. And use it to make yourself a better trader. That would be my goal. That would be my dream. Let's look at Roll a Bitcoin. Roll a Bitcoin being a little bit of a bitch here. Coming just shy. I mean, really this should have been placed here. But we don't play like that. I'll keep it there. Better to miss the boat than board the Titanic. Roll a Bitcoin today at an all-time high. Now, warning, this coin is not traded very long. For it to be at an all-time high is not crazy. Why? Because the market's trended up all year. Any coin that started trading since the beginning of this year should be at our all-time highs. Should be. Why? Because if you think about it, use your brain, it doesn't have, this. It doesn't have this before it because it just started trading. This doesn't really mean it's more bullish or anything. It just doesn't have that bear market history. So for it to be trending not at an all-time high or trending down is probably a really bad sign for a coin. The role of Bitcoin also is like for a gambling exchange. It's certainly not a decentralized coin. It is not something I'd be interested in personally, but it might be a decent trade, right? You might be able to get something out of it trade-wise. You are in price exploration because you have no price above you. 34 cents would be our 1618 extension from our swing high to swing low. That's looking like a good profit-taking target if you're in a position. I think that's all I'm going to say about it. Curve Dow, I haven't looked at in forever. We have a few minutes. I'm trying to just bang out some of these alts for you guys. I'm sorry if I haven't interacted with the chat as much as I would like to today, but please continue to engage with the chat. Engage with the live, vote in the poll, subscribe, share the stream, like, enable notifications. You know the deal. What's up? Insano Creative Lab subscribed. Tim Walker subscribed. What a Chad. Ben Marple became a member. What's up, Ben? Shoaib Sandhu Vlogs subscribed. I love it. Tomas Masti subscribed. Russell Clark. Shmen Lehman. We've got so many good names, guys. Keep them coming. We are racing Bitcoin to 100K subscribers, and we will get there. We will get there with your help. Maybe even this year. I don't know. We'll see. After 100K, I'll stop asking you guys to subscribe, I promise. Curved out, what's going on? You stopped out our long, your little beach. Your little bitch. Back to resistance 51. Not looking terrible. Daily looks good. It doesn't look quite ready to run. It looks like maybe something like this. Not looking bad. But you are right below resistance at 51 cents. Not a lot of ground there to be able to snake out profit on a trade. I heard people ask about near. I did get an alert. We're going to pull that up. I will warn you, we have 7 minutes till the interest rate decision. Things are likely about to get spicy. So hold on to your hats. Near protocol. I think I looked at this on stream last week, and I will admit when my calls aren't right, guys? If you watch any trade influencer that appears to never be wrong, you're watching a fraud. Is what it is, guys. We got the receipts on this channel for 4 years, live trading, live setups. We got the receipts. We don't LARP. Just be careful. Last week when I looked at this, it was right at resistance, $1.29. Looking to the left, very significant resistance. And I said, resistance, same thing as always. We can look for a short, looking for a long, not super successful here. This one would have played out. Here's an example of me being wrong, right? It played out. Really didn't break any lows. Near is now up to $1.50, a nice psychological level. Also, this was our most recent high resistance. Here we are again at resistance. Going long here, same thing as I said down here. You can try, but I think you're at a statistical disadvantage. If anything, 150. Stop loss is going to be a little trickier. 150. Maybe targeting 137. 134. Even back down to 125. It was pretty much untested. We did have some rejection on the day before breaking through. You get a better risk to reward down to like 125. Stop's going to be the hard part of this trade. You are very liable to see some wicks. If this ignores the resistance again, you're looking for like 172, 175. You're not looking bad though. Just risky. 152. We got it. We got it. Just a few minutes. 155. We only got a few minutes. AXS, pretty unremarkable. Last month high hit previous monthly support. Rejected price. This month now in a red candle, chilling under 550. Trading above there might be a better look for this coin. No one's really been asking about it, so we won't really spend time. Right there, it's 200. Looking for a higher low. A higher low would be a great signal, a great sign for continuation. We're going to look at AAVE quick and FTM quick. I'm trying to pack them all in, guys. I'm not even reading the chat because I'm just trying to maximize how many altcoin charts we can get in before the real Chairman Powell stuff starts. friendly reminder, at 2 p.m. it is 1:55. We will get the interest rate decision. We will get it here together in just a few minutes. We'll start prepping. 2:30, Chairman Powell speaks live, and then hopefully Gina will make an appearance. My wonderful, my future wife, Gina. Gina, I love you if you're out there. You're the most beautiful, intelligent woman in the whole wide world. I love you, Gina. Gina! All right. AAVE. Oh, I forgot Link. We'll do Link too. AAVE did break its highs last week. Green candle, strong close above previous resistance. It looks like 97-ish. Pretty solid. 100, always a nice psychological number to take out. Breaking this high, this is some good news for AAVE. It's not totally out of the woods, but breaking a high here does start to eliminate the scary pattern. It does. It starts to take it off the table. I'd say a move above $100 will actually take it off the table. Here it's still a little sketch, just a wick. Could see it sell off this week, but looking much better. Let's take a peek at FTM. Money in the bank. Long is still alive. FTM reaching up to August highs. What's that? 25 cents? 25 cents. I don't know what this is here for. This was like old. I guess this was right here. Yeah, that still plays. 27 cents resistance. 38 above you. Long still open. This is still not out of the woods either. This is still a little sketchy. Still a little sketchy. On the day, money flow definitely rolling over. Definitely signaling some strong move to come. Not quite there yet. Not a lot of thoughts there. I'm going to look at Link, and I think then we have to jump into the FOMC content, guys. It is what it is. Linky Stinky, how you doing here? Link blew past 950 all the way up to 1150 resistance. And I said whether it's 1150 or $15, I'm still looking for the same thing, and that's going to be an entry down at around 10 or 950. This is looking more likely here. Link had been in a giant broadening, falling wedge. It hit this higher low. We said this is where it could get spicy. It did. Broke our high trend. Now we're looking for a back test and a move higher to complete the pattern. What was that? What chart was that that I just looked at? Uni. This is the one similar to Link. This is a much smaller time frame. Link's is over 2 years, basically. This is over just a few months. But same thing, looking for that falling wedge, higher low, break of the trend and bounce. So Uni looking kind of similar to Link, but on a smaller time frame. Are you rolling over yet, Link? I'm not totally convinced. It does look like it wants to retrace a little. Here we go. Here we go. It's 159. So we got to jump off these charts, everybody. Sorry, I got lost in the sauce there. Here's what we got to do. It is tradition. It is tradition here. Everyone open up a Google tab, a Bing tab, a whatever tab you use, and we're going to type in some variation of Fed interest rate decision. And here's what we got to do. All of you guys Googling, looking for anything published. Not yet. No article yet can be valid after 2 p.m. So in the next minute, here's what I want you to do. Google it. Whoever finds it first, put it in the chat. But include a source. Please don't just say a number. Put it in there. Man your stations, baby. Man your stations. I like to use tools anytime past hour. Here we go. None of these are valid. They're all 45 minutes ago. We've got 2 seconds, 1 second. Google, Google, Google. Bloomsburg usually has it soon. Say. Put it in the chat. Put it in the chat. 32 minutes ago doesn't count. 15 minutes ago does not count. Now I'm going to actually look at my phone's live tick. Why am I Googling? To show you guys what to do. Here we go. Dixie's diving. We're getting off here. Guys, put it in the chat. Dixie's eating it on this interest rate decision. Bitcoin mostly unfazed, it seems. We're getting 5.5s. 5.5s. Where's the sauce? Fiat Factory? Flat Fiat Factory, I'll take it. Fiat Factory chiming in. Bitcoin now. Bitcoin, S&P 500, and gold seeing green off of this no interest rate decision. Weird that the markets are reacting so strongly, considering this should be baked in. This should be baked in. Markets have been like very confident that we were not going to get one all month. Here we go. Dollar taking a poop. Taking a poo. Let's go. The spice begins. The spice begins. Wow. Beautiful. Beautiful. 1 minute. This is why we say not that these are very risky to trade. Dollar dumped in that minute. Now a minute has passed. We're 30 seconds in. Pretty much every chart that we were looking at has moved back on that initial 1 minute move. We're very zoomed in, fam. Please remember we're on the 1 minute charts. Dollar retracing some of those gains. S&P 500 has given back all of the gains of the last minute. Gold holding a little bit stronger. If we zoom in here on gold on the 1 minute, a little bit stronger. Potentially holding. Nah, maybe not. Volumes are up, fam. Smash those likes. Smash those heart emojis. Get it hype. The dollar now retracing all of its losses from the last minute. Gold giving it all back. S&P now lower than it was. Bitcoin kind of nicely stuck in the middle. Bitcoin really just holding its ground. S&P has lost ground. Actually, Bitcoin very much like gold here. Roughly holding where it was at. The dollar now in the next minute. Holy shit. This is like some of the spiciest price action we've seen in many a stream. Many an FOMC. Now the dollar in the third minute. Retracing the gains of it made after. This is wild. This is wild, guys. Bitcoin back to where it started. Gold midway through. Stop. Look at these pretty Christmas candles. Christmas candles. Wow. This is actually cool. I'm nerding out. This is a chart nerd's dream. Let's just put gold and the dollar up here. We have got less than 30 minutes till Chairman Powell is live. And I just don't know what even to say. I don't even know what to say. Let's look at like the 1 minute chart here on the core and see if we can just throw anything on it. Can we unnaked this chart? It's kind of janky. Okay, on the 5 it's less janky. Flat topping. I don't hate it. 5 minutes still really weak. 1 minute still weak as well. Don't love that. Was hoping that would change up. 15 minute rolling over right in front of our eyes. Right in front of our eyes. Let's mark on our charts where price was on the close before. There it is. There it is. Dollar now down. Now down. Bitcoin right back to where it was. Not down nor up. Gold up. Stocks down. Are we getting the same setup? Are you guys feeling this? Are you feeling it? Is this the same setup? Gold moving up. Stocks moving down. What happened with Bitcoin? Bitcoin moved up when that happened last time. We are on the 1 minute. This is way too zoomed in to really take that. But just keep your eyes peeled. We had that interesting kind of correlation on the pump to 35K. Gold up, stocks down, Bitcoin up. This is pretty wild. So while we pretty much all but knew there would be no interest rate decision today, no hike. We all but knew that. Markets gave it a 99% chance all month. What is going to be valuable is Chairman Powell's forward guidance, what he says in the FOMC. In the meeting itself, he'll just say the same he always does. We're monitoring the data. We're taking it one day at a time, watching market conditions closely. Numbers aren't really where we want them. And then again, wrapping it up with, we don't have the data yet. But in the questioning afterwards, something tells me that those journalists are going to go hard. They've been going harder and harder into Chairman Powell every FOMC as he just continues to not give answers, right? They've been going more and more savage. I think that they're going to get their claws out today. Hopefully Gina does. And what he says in response is going to be really big, more so than this rate change or this decision. This decision was all but baked in. And I'm surprised to see so much volatility, honestly, off of it. I'm surprised because there's no reason for it. Everybody knew, like, you know, that's obviously an exaggeration, but and like not reality, but that was expected. And when expected things happen, Usually we don't look for super volatility, right? Usually. Usually. All right. All right. We have less than 25 minutes for Chirpow. What are we going to do in the meantime? No, I turned off the music. No. Crap. I was digging that. Let me put that back on. What should we do? Ooh, we got a 1.4 thousand people watching. Pretty good. I'm hoping those numbers break 2K. Yeah, 2K once Oh no. Oh no. It was playing. No. The playlist. Curse you, no copyright sounds. I was playing your playlist. Oh man. And it only had a few songs. And I think we went, no. I was trying to avoid using copyrighted music. Oh well. I'll bitch about it later. Doesn't matter. A little bit of copyrighted music snuck through. It happens. All right. What should we do, guys? What do you want to look at? Dump Bitcoin to 20K, says Sudipto. All right. Fair enough. It's catch 22. Goodness. No matter what, it doesn't change what's coming. True. I think when he speaks, we're going to get something interesting. Maybe it's not what we want. He probably won't yell Bitcoin to the moon. But I think we're going to get... There's going to be something in the FOMC or in the questions that overshadows the decision today. That will just be like more impactful. I have a feeling. The dollar's dumping. Yes, it is. The dollar is down. Stocks are down. Wait. Did I mark the wrong time? I did mark the wrong time here. Okay, let me correct myself. That wasn't quite right. Stocks are actually slightly up. Sorry, I took it from the top of that candle for some reason. They did trade down. They're slightly up, but they're roughly where they were. Gold, slightly up. I did it on Bitcoin too. All right, I was being fair at least. There we go. Bitcoin slightly up as well. That does change the perspective. My bad, fam. My bad. Gold looks pretty good there. Dollar looks pretty terrible here. Bitcoin looks pretty meh. Pretty mids. Let me close some of these charts really quick. We looked at all these. Thank you, Steve, for your chart, man. And thank you for having your community here. Shout out to the optical art community. Hopefully our communities can be brothers in crypto someday. Interesting. This is just by chance I pulled this up. Interesting. GBTC, now it is lagging. GBTC has about a 10 or 15 minute delay of data. I don't remember which. But GBTC here looking very strong, actually. It probably doesn't have the price action that we just saw. That could be why. Maybe that hasn't hit yet. But looking pretty strong here. No new yearly high on GBTC this month. There was on spot. However, this is looking pretty damn good. That is a very flat top. GBTC has remained slightly more bullish than Bitcoin all year. And here we go. I like that. Our lows are coming up. Our flat top is here. Higher low, higher low, higher low. You're just bouncing around here. GBTC looks like it wants to break out. It is delayed. So maybe when we get that data, from the interest rate decision, maybe we see that, right? We might see that happen. We'll see. I have my alerts set. That would be a very good indicator. I was saying earlier, gold would be a really strong indicator as to what direction Bitcoin was going to go. But GBTC, absolutely up there. Absolutely, if not as strong, maybe stronger than gold. Let's see. Dollar just waddling. We're sideways. If we were to have the typical FOMC price action, let's zoom out again. We would have, all right, we trended up to the interest rate decision. We would have Powell speaks. We'd have the sell-off. And then as he speaks, likely return. That's what we would typically be watching for. However, we kind of got that price action already. We got the sideways, up, down, back to the middle. We already had that. I started the stream with that. Very interesting. I don't think we've ever seen that before. I don't know if we've ever seen that before. Be careful trading today, guys. If you're just joining us, today is a very, very difficult, very volatile, high probability of getting liquidated day to trade. If you are going to trade and you're just going to ignore my warning, I can't stop you, but you might as well use my link on FOMC. That way, if you lose your ass, I'll have like a few dollars in fees from you. Appreciate it. They are a sponsor. They're great. You should join the Discord. I'm going to just stop shilling stuff. We've got less than 20 minutes now, and we're waiting for the data. We're waiting for the data. I'm reading the chat. I'm going to read the chat now, interact with you guys a little bit while we wait. I want to see what charts do you want to look at? How are you feeling about today? What's on your minds? If you're here, let me know, because I have not really been reading the chat much because I've been in the zone. But I'm taking a moment before Chairman Powell speaks to get out of the zone and see what's up. BCH, Bcashy, of course you're looking at it. Where is Corky Paul? I don't know. What's up, No Watini? What's up, Fish? Pump it. Sol, we looked at Sol. Is it still pumping? Yep. Sol might hit this 48 today. Wow. Yeah. $48 now, only less than 10% move up on Sol. Be careful, fam. Be careful. Be very careful. You had a 32% week, then a 13% week. Now you're at a 34% week. On Sol, back to back to back to back. What do we say about tops of green candles? What do we say? They're very dangerous. Just be careful. This chart has looked hella good pretty much all year. Still does. But unfortunately, I think if you haven't longed, I think you missed your shot. There will likely be other shots. In fact, I'm more confident that there will be more shots than I am that it breaks 48. I mean, maybe we see 50, but like, there'll be more shots. And if not, there's other coins. I think you've missed it if you haven't entered it. Honestly, if you didn't enter it like a week or two ago, I think you missed your shot. Right now. Be careful. Don't get wrecked, please. Please. Don't get wrecked. Sol, 700% profit. Right on, Frank. Love it. ADA? Sure. Yeah, I didn't get ADA. Let's grab ADA. Let's grab ADA. Did Cardano. Did Cardano push through resistance yet? Not yet. Not yet. It hasn't rejected, though. That's not a bad take. Not a bad take. I've been bearish on ADA. That can change trading and closing above 31 cents. That can change quickly. We basically, I hate saying predicted, but predicted ADA would return to this monthly order block right here. It did close in it above 28.6. Good stuff. Did not trade above 31 or 30.8 cents. That's all right. This is heavy resistance. And while this rally is nice and could be, and we could say, man, looking at the rest of the market, probably is the start of something exciting. It hasn't done it yet. I need to see it trade above 31 cents. Close it daily above 31 cents, and I think you're headed to 35 very quickly, likely as high as 40, like very quickly. But while you're at this monthly order block, you're just in resistance. And you could see this chart as it kind of is right now. As it kind of is right now. You could see this chart just dance around in here. Especially if Bitcoin just trades sideways, doesn't break a high or a low. You can see it just mess around in this resistance for a while. It's possible. What's unfortunate, honestly, is when you had it on a higher time frame, it kind of looked like it broke this. It didn't quite break this yet. That's why 31 is really important to me here. If it doesn't break 31 cents on this attempt, and it moves down, I'll say below 26 cents, I think this is still in play. I don't want it to be true. I want to be bullish on Cardano. I haven't been able to for a while. I'd like to be. Need to break this high structure. You need to break this flat low structure, or else you're just looking for it to break the low back test and then basically look for support. And that support can be far down. It is very close. The rest of the market rallying. Great sign for it. Great sign for it. I gotta set an alert. Great sign for it, but it's not quite there yet. I wish it luck. I still have, I don't even know how many ADA, somewhere. In some wallet staking for years. Let's look at XRP really quick while we have a minute. Check NVIDIA. All right, we can check NVIDIA. I haven't looked at NVIDIA in a while. I don't think I got any alerts, though. NVIDIA looks pretty crappy. This does not look great, guys. Let me, before I say too much. Huh. Where is, like, I want to say this is the neckline. I want to say this is the neckline. 404. Ha, 404. This is not a super clean chart. Usually stocks are cleaner. Like, I would like this. This would be like the logical neckline, September 21. We drew this arrow and this target like a long time ago, way before this happened. Look at that. That looks pretty bad. That looks pretty bad. This wick and close on NVIDIA is like a lifesaver for it. If it trades back below 404 and then it comes back to 404, you know what I'm going to do. You know what I'm going to say. You already know. You already know. You already knew it. In your heart of hearts, you knew it. This does not look good. This is absolutely invalidated. This is why I think this is a good trade. Basically, you're looking for the head and shoulders pattern. You have a shoulder, head, shoulder, right? You broke it. You wicked above, though, so it's holding for now. If price continues back up and breaks the high of the shoulder at 477, you're not in this pattern anymore. That's just thrown out. It's no longer your head and shoulder. You have your invalidation. You have your entry, the neckline, 404. What are you looking for now? You're looking for a lower high again. Looking for a lower high. Could see like 450 maybe. That is a little high. Little high? I'm not a little high. I'll be a lot of high after this live stream, but not right now. NVIDIA, you do not look good. Let me see. You do have some divergence building. This is an interesting low here. It does seem like the market's held it pretty well, but you're definitely not out of this lower high structure yet. Let's look at like the monthly on it. Yeah, it looks like it's just kind of bouncing off that. Ooh. 402, is that a better neckline? That is a better neckline. It's weird because apparently 402 on the monthly it traded there, but not on the daily. I don't get stock charts sometimes. I don't get it. Stocks, you're wonky, man. You're wonky. Wow, NVIDIA does not look good. Well, they just had some new competition stuff, right? Wasn't Apple talking about doing chip fab? Something like that. Also, Ethereum no longer being proof of work. I don't know why GPU makers were like celebrating that. It's so weird. I understand why gamers were, but like GPU manufacturers were like celebrating Ethereum no longer being proof of work. Bro, you know that's like the main reason that your GPUs were selling for wild prices is because the demand was almost infinite. I don't know why. I don't get it. That alone was bearish for GPUs. Bitcoin now roughly where it was at the time of the interest rate decision. Traded below, traded above. Not a lot has happened there, honestly. Kind of just waiting for Chairman Powell, maybe. Long was in the right direction, but it does not look like we got filled. This pattern, as we discussed, was invalidated by the higher high, so we don't have that. Weekly is now green on the corn. Oh yeah. Oh yeah, it's green on the corn. Bitcoin has a little bit more upside still. in my opinion. Gold actually performing the best here. Gold performing the best so far post no hike announcement. Gold is up, and it has basically, no, it hasn't traded below where the announcement was made. Stocks absolutely traded below, and now they're just back to break even. The dollar has traded both above and below, but now is just losing potentially. Bitcoin above and below, but a little bit up. Gold the winner so far. I don't think that's a bad sign, though. I don't think that's a bad sign. I think that's good for Bitcoin. We have 9 minutes until Powell. Are you ready? Discover Crypto is here. Discover Crypto. I'm not going to say anything right now because I'm in the zone and I don't want to like have diarrhea mouth. But what's up, Discover Crypto? How you doing, brother? Whoever's on the account. Crude, we can look at crude. We have less than 10 minutes for Powell. Get hyped. Get ready. Get ready. Finish them. Crude. That is an ugly ass lower high, crude. That is ugly. I don't think anybody wants crude to go up. Ooh. Ooh. Smacked at the 618. What? Gnarly. Smacked at the 618. Kapow. Chirpow. Kapow. Badow. Boom. Retrace. Boom. Where are we going to look next? You guys know it already before I say it. Ooh, little confluence there as well. 6166. Just doing the logical without doing any other kind of analysis. You have a swing high, a swing low. Your golden retracement. 618 at 7865. You hit it, you rejected. So what are we going to look for? We're going to take our swing low and our swing high, and we're going to look at that 618. Right there. We also have confluence here. Our original or macro retracement. That's our 236. It's overlapping with our 618. If we zoom into the day here, this is also basically the resistance, support, move up. Come back, test that as support would not be something that would be unexpected. That'd be pretty classic. Pretty classic. Money flow on the day rolling over. Yeah, crude's looking pretty good there. Like pretty good for right here. Yeah. If it bounces from there, you can start then building something bullish. If you come back up to 7-8. You could maybe do that. Look for a break to the upside. If you lose this, you lose 6,166. You're likely looking at 5,300 again. Retest the lows. Let me see. We've got about 5 minutes for Chirpow, fam. I'm going to tune out the music now. We're going to get serious. We have over 2,000 people viewing. Almost 2,500 people using. Wow. Wow. Hell yeah. Hype it up. Can we get a Pepe chart? I'll pull it up. I'm not going to talk about it. We don't have time. We don't have time. Where did all the time go? Wow, time really did go by fast. We haven't been Was it ever alive? SafeMoon, I guess the SEC filed against SafeMoon for unregistered security. Finally, the SEC going after bad guys. It's good to see. Wonder if the protesters are going to be there. Oh, yeah. Oh, I forgot, dude. That was so funny. Destructive. That was so... What were they yelling? Something about dirty energy or dirty... Get off... Fossil... What was it? What was the chant? One kudos to whoever remembers it. First one to put it in chat, one kudos. Tezos to the moon. What up, RS Crypto? How you doing, brother? Just FYI, no more interest rate is actually bearish, says Optical Art. Markets crash about 8 to 11 months after the Fed pivots historically. I have heard that. I think I saw Benjamin Cohen talking about that at one point. Well, we'll see what they have to say today, honestly. That I know it's not the great answer. It's not satisfying. But the Fed has pretty much stuck to their word when it comes to interest rates, what they're going to do with them. In this tightening cycle, they have. They have said now, multiple times in a row, multiple meetings, that there are more rates for this year. We haven't seen one, but we do have another FOMC meeting in December. So if we didn't get one today, it does stand to reason that we might in December. But Steve's logic or rationale there, definitely on point. That has been true, right? That has been true, I believe, in whenever was it, 08? Then before that, the last two examples. This short is getting a little more sketchy. 0.5. If you guys want to see more live stream trade, I know I didn't live stream these setups, but if you want to see more of these being built in real time, getting the understanding, the logic, the process that I have that goes into them, tune into our live streams Monday, Wednesday, Friday, or whenever it's spicy. Also, follow me on Twitter. I do post a lot of them to Twitter. Let me see. Here we go. Like this bad boy. And I immediately posted, I think I'm going to double dip. There you go. This one had been posted like elsewhere first. I know. It didn't fill here. If you go back, I do post them. I do tweet them quite often. This bad boy. Wish me luck. That one hit at 35 earlier. Yeah, I'm done tooting my own horn. I don't like tooting my own horn. We got 2,500 people watching. They don't want to see me toot my own horn. Let's see where the chips fall. Yep, pretty much. What's up, M Stone? Good to see you. 80% chance Fed stays paused in December. So that would be interesting because it would be a deviation of what they've said. It'd be a deviation of like what they planned out, what they said. And that might uncertainty, you know, throwing markets curveballs. They don't really like that. I see a lot of new names here. Albert Einstein's here. Alex Medeiros, Beans and Rice, Big Coins, Big Tuna Crypto, my man, is here. Being a big fish. Bitcoin Buff, Brendan Bruno, CA96, Sean Chisel, Andruska's back, 14 Fom Min, Crypto Fart, there's a new one, Crypto Shaped, there's a new one, Danny Butts, David, Deku, Doug, Dr. Villain, Duke Burger, Evade, Fahid, Felipe, Foxy Thorny here. You were here at the beginning, but I don't think I caught you then. FBV, Gold Dragon's back, Haroon, Hugo, Jeff, Jolly. Jesus, there's so many names. Love you, long time. Love you, long time. Magnus Larson's here. What's up, brother? Make Money Trading, Marco, Moggy Games, the beautiful thumbnail architect for our channel now. Here we go. I'm not going to be quiet the entire time, but I am going to shut up and just be entertaining in the background. Let me know if the volume's too low.
Good afternoon, everyone. Welcome. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks we face, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier expectations. In the third quarter, real GDP is estimated to have risen an outsized annual rate of 4.9%, boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.8%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years, and immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September. Excluding the volatile food and energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor.
We'll do that.
Evidence of growth persistently above potential, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond yields, among other factors. Because persistent changes in financial conditions can have implications for the path of monetary policy, we monitor financial developments closely.
Oh, do you?
In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook and
I thought you had
for
the
economic activity and inflation, as well as the balance of risks. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below potential growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
No, you don't, buddy. Gina. Get it.
Howard Schneider with Reuters. Thank
not
you,
Gina.
Chair
Shut
Powell,
up,
for
Howard.
doing this. To what you referenced the rise in long-term bond yields, to what degree did that supplant action by the Fed at this meeting?
Thanks for your question. So I'll talk about bond yields, but I want to take a second and just sort of set the broader context in which we're looking at that. So if you look at the situation, let's look at the economy first. Inflation has been coming down, but it's still running well above our 2% target. The labor market has been rebalancing, but it's still very tight by many measures. GDP growth has been strong, although many forecasters are forecasting, and they have been forecasting, that it will slow. As for the committee, we are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. And we're not confident yet that we have achieved such a stance. So that is the broader context into which the strong economy and all the things I said, that's the context in which we're looking at this question of rates. So obviously we're monitoring, we're attentive to the increase in longer-term yields, and which have contributed to a tightening of broader financial conditions since the summer. As I mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and lower equity prices, could matter for future rate decisions as long as two conditions are satisfied. The first is that the tighter conditions would need to be persistent, and that is something that remains to be seen. But that's critical. If things are fluctuating back and forth, that's not what we're looking for. With financial conditions, we're looking for persistent changes that are material. The second thing is that the longer-term rates that have moved up, they can't simply be a reflection of expected policy moves from us. That we would then, that if we didn't follow through on them, then the rates would come back down. So, and I would say on that, it does not appear that an expectation of higher near-term policy rates is causing the increase in longer-term rates. So, in the meantime, though, perhaps the most important thing is that these higher Treasury yields are showing through to higher borrowing costs for households and businesses, and those higher costs are going to weigh on economic activity to the extent this tightening persists. And the mind's eye goes to the 8%, near 8% mortgage rate, which could have pretty significant effect on housing. So that's how I would answer your question.
Just as a quick follow-on to be clear on this, in your opening statement and just now, you seem to imply that you are not yet confident that financial conditions are restrictive enough to finish the fight. Is that true?
Yes, that's exactly right. to say it a different way, we haven't made any decisions about future meetings. We have not made a determination, and we're not, I will say that we're not confident at this time that we've reached such a stance. We're not confident that we haven't, but we're not confident that we have. And that is the way we're going to be going into these future meetings, is to be, just determining the extent of any additional further policy tightening that may be appropriate to return inflation to 2% over time.
Gina.
Everybody shut up. Shut up. Stop typing. Gina's talking.
Hi, Chair Powell. Thank you so much for taking our questions. I wonder, if you don't raise interest rates in December, would the presumption be that at that point that we should expect that rates are at their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
Go on. Go on.
So let me start by saying we haven't made a decision about September. You're asking a hypothetical there, but we're going into the December meeting. We'll get, as you know, 2 more inflation readings, 2 more labor market readings, some data on economic activity, and so we'll be taking, and also the broader situation, the broader financial conditions situation, and the broader world situation. We'll be looking at all those things as we make a decision in December. We haven't made that decision. I would say, though, that the idea that the idea that you would be difficult to raise again after stopping for a meeting or two is just not right. I mean, the committee will always do what it thinks is appropriate at the time. And again, we haven't made any decisions at all about December. We didn't talk about making a decision in December today. Really, it was a decision for this meeting and understanding broader things.
Nick.
Gina again. One more time.
Nick Timmeros of the Wall Street Journal. Chair Powell, did the Fed staff put a recession back into the baseline forecast in the materials for today's meeting? And how much does this tightening in financial conditions substitute for rate hikes if the tightening is persistent? You had said it was worth maybe a quarter point when we had the bank failures in the spring. What is it here on something that's presumably more straightforward and more familiar to simulate?
So I guess I don't want to answer your question about the recession, but the answer is no. I think I have to answer it since we did publicly say in the minutes. You'll know anyway in the minutes. The staff did not put a recession back in. I mean, it would be hard to see how you would do that if you look at the activity we've seen recently, which is not really indicative of a recession in the near term. In terms of how to think about translation into rate hikes, I think it's just too early to be doing that. And the main reason is we just don't know how persistent this will be. You can see how volatile it is. Different kinds of news will affect the level of rates. And I think any kind of an estimate that was precise would hang out there and have a great chance of looking wrong very quickly. So I think what we can say is that financial conditions have clearly tightened, and you can see that in the rates that consumers and households and businesses are paying now. And over time, that will have an effect. We just don't know how persistent it's going to be, and it's tough to try to translate that in a way that I'd be comfortable communicating into how many rate hikes that is.
Translate.
I guess what makes you confident that tighter financial conditions will slow above trend growth when 500 basis points of rate hikes, QT, and a minor banking crisis have not thus far?
Well, that's the way our policy works is, and sometimes it works with lags, of course, which can be long and variable. But ultimately, if you raise raise interest rates, you do see those effects, and you see those effects in the economy now. You see what's happening in the housing market. You're seeing that now. You'll see. If you look at surveys of people, it's not a good time, they think, to buy durable goods of various kinds because rates are so high now. I mentioned again, we're getting reports from housing that the effects of this could be quite significant. But you're right. This has been a resilient economy, and it's, I think, been surprising in its resilience. And there are a number of possible reasons why that may be. Our job is to achieve maximum employment and price stability, and so we take the economy as it comes. It has been resilient, so we take it as it is.
Colby.
Gina again, not Colby. Stop
Thank
calling
you.
wrong
Colby
people.
Smith with the Financial Times. In terms of the thresholds that you've laid out of what could warrant further tightening, the additional evidence of persistently above trend growth or some kind of reversal in the recent easing of labor market tightness, that seems to suggest something more powerful than just one more quarter point rate hike would be necessary. And I'm just curious if that's how the committee sees it.
So we've identified those factors. Those were not meant to be the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture and what's happening with our progress toward the 2% inflation goal. Is the labor market continuing to broadly cool off and achieve a better balance? We'll be looking at that. Growth, we look at growth insofar as it has implications for our 2 mandate goals. We look at that. And we look at broader financial conditions. So we'll be looking at all of those things as we reach a judgment, whether we need to further tighten policy. And if we do reach that judgment, then we will further tighten policy.
Okay. And just in terms of the tightening of financial conditions, if that is having some kind of offsetting effect in terms of the need to potentially, again, raise rates, what then is the potential impact on the trajectory of rate cuts? Could we see those maybe pulled forward or have to see more than what the September SEP indicated?
So the fact is the committee is not thinking about rate cuts right now at all. We're not talking about rate cuts.
We are.
We're still very focused on the first question, which is, have we achieved a stance of monetary policy that's sufficiently restrictive to bring inflation down to 2% over time, sustainably? That is the question we're focusing on. The next question, as you know, will be, for how long will we remain restrictive? Will policy remain restrictive? And what we said there is that we'll keep policy restrictive until we're confident that inflation is on a sustainable path down to 2%. That'll be the next question. But honestly, right now, we're really tightly focused on the first question. The question of rates cuts just doesn't come up because I think it's so important to get that first question, as close to right as you can.
Get it right. Stop getting it wrong.
Steve Leisman, CNBC. Mr. Chairman, I guess I had assumed that there was a tightening bias in the committee. You say in the statement you're looking to assess the appropriate stance of monetary policy, the extent to which you may need to hike additionally. You didn't say earlier that you were sufficiently restrictive. There were forecasts for 2 rate hikes among most members of the committee. But then you just said that, we haven't made a determination. Would you say the bias right now is neutral, that there is no disposition to hike again, and that the committee largely has moved off of this forecast for 2 hikes? Or for, one additional hike
I think you're
this
talking
year?
about one additional.
Yeah,
I wouldn't say that at all. I would say, the language, looking at it here, in determining the extent of additional policy firming that may be appropriate to return inflation 2% over time, that's the question we're asking.
So is it right to think of that as a hiking bias is still in the committee here?
We haven't used that term, but it's fair to say that's the question we're asking: is should we hike more? It's not, and that is the question. And you're right that in September we wrote down one additional rate hike, but and we'll write down another forecast, as you know, in December.
Chris.
Thank you. Chris Rugaber at Associated Press. Since the last meeting, the auto workers' strike has finished. Oil prices have leveled off. And yet, on the other hand, you have the outbreak of war between Israel and Hamas. How do you see all those factors taken together affecting the economy going forward? How are you thinking about those?
So there are significant issues out there. As you point out, global geopolitical tensions are certainly elevated. And that goes for the war in Ukraine. It goes for the war between Israel and Hamas. We're monitoring that. Our job is to monitor those things for their economic implications. So the UAW strike, as you point out, appears to be coming to an end. Oil prices have flattened out. They haven't gone down, but I guess they've gone down a little bit from their earlier peak. Another one is the possibility of government shutdown. We don't know about that one. So there's plenty of risk out there. But I would go back to the bigger picture from our standpoint is we've got a very strong economy, strong labor market, making progress on the labor market, making progress on inflation, and we're very focused on getting confident that we have achieved a stance of monetary policy that is sufficiently restrictive. That's really our focus.
Great. And just one quick thing.
Could
You
you
last month
yourself
had gone to
more
York,
times?
Pennsylvania, where you talked to a lot of, last month, where you talked to a lot of small business owners. Just curious, what sentiments did you hear from them, or what did you picked up on, and was there anything that surprised you the most in terms of what they talked about?
I wouldn't say I was terribly surprised. I was very
Yeah, bad
impressed
football
by York as a town with a real strategy, and I would say it's very impressive what the people there have put together in the face of some difficult longer run trends about offshoring of manufacturing and that kind of thing. They've done a great job as a city, I think. What you hear is consistent there, which is people are really suffering under high inflation. You were there. We talked to some people who, were feeling that in their businesses, and other people who were feeling it in their home lives as well. It's painful for people, particularly people who don't have a lot of extra financial resources, who are spending most of their income on the essentials of life. So we know that wasn't new, but that did come through very clearly in the conversations we had in New York. And I walked away from that even, just thinking that we really the best thing we can do for the U.S. is to restore price stability. Fully restore price stability and not fail in that task, and do it as quickly as possible, but also with the least damage we can.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post.
Sure.
Thanks for
Oh,
taking
she
our
said
questions. You've spoken before about the pain that would likely be coming for the economy in order to get inflation down. But since the economy has not responded to rate hikes in ways that would normally be expected, have you changed your views on that at all, on how necessary or inevitable that kind of pain would be, say, for the labor market or overall growth?
Well, I think everyone has been very gratified to see that we've been able to achieve, pretty significant progress on inflation without seeing the kind of increase in unemployment that has been very typical of rate hiking cycles like this one. So that's a historically unusual and very welcome result. And the same is true of growth. We've been saying that we need to see below potential growth, and growth has been strong, but yet we're still seeing this. I still believe, and my colleagues, for the most part, I think still believe that it is likely to be true. It is still likely to be true, not a certainty, but likely that we will need to see some slower growth and some softening in the labor market conditions to get to fully restore price stability. So, but it's only a good thing that we haven't seen, and I think we know why. Since we lifted off, we have understood that there are really two processes at work here. One of which is the unwinding of the distortions to both supply and demand from the pandemic and the response to the pandemic, and the other is restrictive monetary policy, which is moderating demand and giving the supply side time to recover, time and space to recover. So you see those two forces now working together to bring down inflation. But it's that first one can bring down inflation without the need for higher unemployment or slower growth. It's supply side improvements like shortages and bottlenecks and that kind of thing going away. It's getting a significant increase in the size of the labor market now, both from labor force participation and from immigration. That's a big supply side, gain that is really helping the economy, and it's part of why GDP is so high, is because we're getting that supply. So we welcome that, but I think those things will run their course, and we're probably still going to be left. We think, and I think, we'll still be left with some ground to cover to get back to full price stability, and that's where monetary policy and what we do with demand is still going to be important.
I'm curious against that backdrop, if you've gotten any clarity on lags, if you have an economy that's been so resilient to high rate increases, does that suggest to you that there isn't necessarily this huge wave of tightening that's still coming through the pipeline, and that it may have already come into effect?
I continue to think it's very hard to say. So it's been 1 year at this meeting. 1 year ago, this was the fourth of our 75 basis points hikes. So that's a full year since then. I think we are seeing the effects of all the hiking we did last year, and this year we're seeing it. it's very hard to know exactly what that might be. But you can, for example, an example of where you wouldn't have felt this yet is debt that had been termed out. But it's going to come due and have to get rolled over next year or the year after. So, and there are little things like that where the effects are just taking time to get into the economy. So I think we have to make monetary policy under great uncertainty about how long the lags are. I think trying to make get a clear answer and say, oh, I'm just going to assume this is really not a good way to do it. And this is one of the reasons why we have slowed the process down this year, was to give monetary policy time to get into the economy. And it takes time, we know that, and you can't rush it. So slowing down is giving us, I think, a better sense of how much more we need to do if we need to do more.
Gene.
Michael McKee from Bloomberg Television and Radio. I'm trying to connect the dots here. One quick clarification I want to ask about Rachel's question is, you said you need slower growth. You had always said before a period of lower than trend growth. Has that changed? And two, it sounds to me like you're basically saying here that the dot plot's out the window, that every meeting is live with the possibility of a rate increase for right now. It doesn't matter about the turn of the year, and that there's not an objective way to determine whether or not you've got enough tightening in the system. It's just going to be a subjective judgment meeting by meeting.
Well, so let's talk about the dot plot first. So the dot plot is a picture in time of what the people in the committee thinks is likely to be appropriate monetary policy in light of their own personal economic forecast. In principle, when things change, that's not like a plan that anybody's agreed to or that we will do. That's a forecast that would change, for example. I mean, many things could change that would cause people to say, I wouldn't write down that dot, 6 weeks later. Think of the number of things that could change your mind on that. So I think the efficacy of the dot plot probably decays over the 3-month period between that meeting and the next meeting. But nonetheless, it's out there, and we do personally update our forecast, but we don't formally update the dot plot. So, I think we try to be as transparent as we can about the way we're thinking about these things. We're laying out there our thinking, and as we approach the meeting, we'll all be, my colleagues and I will be talking about how we're processing that data. In terms of, we're not really changing the way, in terms of growth, what I said was below potential. So what you have here recently is growth that is temporarily, potential growth is elevated for a year or two right now over its trend level. So the right way to think about it is, what's potential growth this year? People think trend growth over a long period of time is a little bit less than 2%, or I would say just around 2%. But what we've had is with the improvement in the size of the labor force, as I mentioned, through both participation and immigration, and with the better functioning in the labor market, and with the unwinding of the supply chain and shortages and those kinds of things, you're seeing actually elevated potential growth. There's catch-up growth that can happen in potential. And that means that if you could be growing at 2% this year and still be growing below the increase in the potential output of the economy. I hope that's clear. That's really what's going on. That's why I would say it as below potential.
But if you could clarify what I asked about the meeting by meeting, are we essentially now supposed to assume that it's a meeting by meeting, live meeting with a chance of a rate increase that will be decided on subjective criteria rather than objective at each meeting?
I don't know that I want to just accept anybody's characterization of it. I'll tell you how we're doing this. So we're going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at. And then we've come very far with this rate hiking cycle, very far. And you saw the spread at the September meeting of, it's a relatively small spread of people think 1 or 2 additional hikes. So you're close to the end of the cycle. That was an impression a belief as of September. It's not a promise or a plan of the future. And so we're going into these meetings one by one. We're looking at the data. As I mentioned, we're also,
Data. He's looking at it.
we're being careful. We're proceeding carefully because we can proceed carefully at this time. Monetary policy is restrictive. We see its effects, particularly in interest-sensitive spending and other channels. So that's how I think about it.
He's looking at the data, but then conveniently never has the data. All right.
Thanks. Hi, Chair Powell. Neil Irwin with Axios.
Chair Powell,
In light of the
he said
run-up
it.
in long-term yields we've seen the last several weeks, have you given any consideration to the pace of your asset runoff program? And if there were a judgment that the higher term premium was endangering the dual mandate goals, would that be reason to think about slowing or suspending QT, or should we think of that as more of a technical question around reserves?
So
Stock's running.
committee is not considering changing the pace of balance sheet runoff. It's not something we're talking about or considering. And I know there are many candidate explanations for why rates have been going up. And QT is certainly on that list. It may be playing a relatively small effect, although I would say at $3.3 trillion in reserves, it's not. I think it's hard to make a case that reserves are even close to scarce at this point. So that's not something that we're looking at right now.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask about the Basel III endgame capital proposal. You've
Sounds
gotten
like a
a lot
web
of
food
pushback from
project.
people on different aspects of the proposal, and you yourself expressed some reservations. And I'm just curious, could you accept finalizing that proposal without significant changes?
So that proposal is out for comment, and we expect a lot of comment. We won't get those comments until the end of,
They don't have
until
the
well into
comments
next
yet,
year.
guys.
We've extended the deadline. And we'll
looking
take
at
them
it.
seriously. We'll read them. I'll say what I do expect is that we will come to, we're a consensus-driven organization, we'll come to a package that has broad support on the board.
So does broad support mean more support than the proposal had?
It means broad support.
Does it mean it means broad supports? It's very clear. It's very clear. in what I
Janelle
said.
Marte with Bloomberg. So, in addition to persistence, when you look at long-term treasury yields, what else are you watching to evaluate
kinda
how
cute,
those
though.
tighter financial conditions are hitting the economy and if it will lessen the need for further tightening? Also, do you think that those higher yields could affect banking stress?
So what do we look at? We look at a very wide range of financial conditions. And in fact, as you'll know, different organizations publish different financial conditions indexes, which can have 7 or 8 variables, or they can have 100 variables. So there's a very rich environment, and we tend to look at a few of them. I'm not going to give you the names, but there are a few of the common ones that people look at. And so they're looking at things like the level of the dollar, the level of equity prices, the level of rates, the credit spreads. Sometimes they're pulling in credit availability and things like that. So it isn't any one thing. We would never look at, for example, long-term treasury rates in isolation, nor will we ignore them. But we would look at them as part of a broader picture. And they do play a role, of course, in many of the major standard financial condition indexes. Your second question was?
What are you looking at?
Banking stress. So it's something we're watching. As you know, we did have, there were issues with interest rate risk and also, funding uninsured deposits in the things we went through in March and thereafter. And so we've been working a lot with financial institutions to make sure that they have good funding plans and that they have a plan for how to deal with the kind of portfolio unrealized losses that they have. We do think the banking system is quite resilient. We had a handful of that's what we're out there doing, and we don't have any reason to think that these rate hikes are materially changing that picture, which is one of a strong banking system and one where there's a strong focus by banks and by supervisors on liquidity, on funding, and those sorts of things.
Those sorts of things. No specifics.
Thanks, Mr.
Very
Chairman. Scott Horsley from
broad.
NPR. Last week, you and your colleagues put forward a proposal to lower the cap on debit card swipe fees for comment. Could you just talk a little about the considerations there, what it would mean for merchants, for banks, for consumers, and also just
No.
what y'all are seeing in terms of the use of both debit and credit cards in the,
What about
in the payment
Bitcoin,
system.
Chair Powell?
You know, so you're right. We put a proposal out for comment is what we did. And, you know, this is a job that Congress assigned us, as you of course know, in Dodd-Frank, and all we can really do is faithfully implement the statute. That's all we're trying to do. What else can we really do? It's a 90-day comment period. We typically don't comment on these things once they're out for comment, and we do hope that stakeholders, and we know that they will use this opportunity to express their views. They haven't been shy about that. So that's critical, and that's what I can say about that now.
Thank you. Thanks, Chair. Edward Lawrence with Fox Business. So over the last 3 months, the year-over-year PCE inflation was at 3.4%, core well over 3%. You've said in the past 2% remains the Federal Reserve target, but with no rate increase today, how long would you be okay then with a 3% or 3% plus overall inflation?
You know, the progress is probably going to come in lumps and be bumpy, but we're making progress. You know, I think the core PCE came down by almost 60 basis points in the third quarter. So the best thing I could point you to would be the September SEP, where you know, the expectation was that inflation by the end of next year on a 12-month trailing basis would be well into the twos, and the year after that further into the twos. So that's if you look historically, that's sort of consistent with the way inflation comes down. It does take some time, and as you get further and further from those highs, it may actually take a longer time. But the good news is we're making progress, and monetary policy is restrictive, and we feel like we're on a path to make more progress, and it's essential that we do.
Well, you've said in the past that doing too little on interest rates could take years to fix, but the cost of doing too much could be easily fixed. How robust was the debate about this pause on the doing too little side?
That's always the question we're asking ourselves, and we know that if we fail to restore price stability, the risk is that expectations of higher inflation get entrenched in the economy, and we know that that's really bad for people. Inflation will be both higher and more volatile. That's a prescription for misery, and so we're really committed to not letting that happen. You know, for the first year or so of our tightening cycle, the risk was all on the side of not doing enough. We've come far enough that the risks have gotten more two-sided. You can't identify that with a lot of precision, but it does feel like the risks are more two-sided now. But we're committed to getting inflation back down to our target over time, and we will.
Simon.
Will you?
Simon Rabinovich with The Economist. Quick follow-up to the question about banking stresses. You talked about how the banking system is resilient. Of course, part of the resilience the past year stems from the bank term funding program that you launched in March. Given that bond prices have not recovered, that unrealized losses are probably mounting, how likely is it that you might have to extend that program in March next year?
Good question. We haven't really been thinking about that yet. It's November 1, and that's a decision we'll be making in the first quarter of next year.
Okay. Sorry, quick separate question about inflation expectations. The Michigan Sentiment Survey showed a big jump in 1 year ahead inflation expectations last month from 3.2 to 4.2. Last year, you said that particular survey was a really decisive factor in one of your rate hike decisions. If it stays elevated next time around, how big of an input will that be into your December thinking?
Yeah, we look at a range of things. I think the UM thing got blown out of proportion a little bit. It was actually a preliminary estimate that got revised away, and I said it was preliminary in that, but that didn't get picked up. So we look at many things, and so really look across the broad array of surveys and also market-based estimates, and we do that really carefully at every meeting and between meetings. And it's just clear that inflation expectations are in a good place. The public does believe that inflation will get back down to 2% over time, and it will. They're right. So, and there's no real crack in that armor. You can always find one reading that is a little bit out of whack, but honestly, the bulk of them are just very clear that the public believes that inflation will come down, and that's, of course, we believe that's critical in winning the battle.
gold hit target.
Hi, Chair Powell. Megan Casella with Barron's. Thanks for taking our questions. I wanted to see if you could talk about the neutral rate. You mentioned today that you're still debating whether rates are sufficiently restrictive, and you've recently said that evidence is suggesting policy is not too tight right now. So I was curious if you could elaborate on that at all and whether that means the neutral rate, in your view, has risen.
Yeah. So first thing to say is that it's very important. It's a very important variable in the way we think about monetary policy, but you can't identify it with any precision in real time, and we know that. So you have to just take that. You have to take your estimate of it with a grain of salt. What we know now is, within a range of estimates of the neutral rate, policy is restrictive, and it's therefore putting downward pressure on economic activity, hiring, and inflation. So we do talk about this. There's not any debate or attempt to sort of agree as a group on whether our star has moved or not. Some people think it has. Some people haven't said that don't think it has. Ultimately, it's unknowable, and so really, again, what we're focused on is looking at the data and giving ourselves a little more time now to look carefully at the data by being careful in our moves. Does it feel like monetary policy is restrictive enough to bring inflation down to 2% over time? That's the question we're asking ourselves. I think years from now, economists will be revising their estimates of R star as it existed on November 1, 2023. We can't really wait for that in making policy. We have to we have to have those models and look at them and think about them, but ultimately we've got to look at the effects of that policy is having, accounting for the lags, which makes it difficult.
If I could follow up on a wages point earlier, you talked about the inflation outlook, but I'm curious if you have any concerns whether wage inflation at its current level could risk pushing up overall inflation or reacceleration.
So if you look at the broad range of wages, they have wage increases have really come down significantly over the course of the last 18 months to a level where they're substantially closer to that level that would be consistent with 2% inflation over time, making standard assumptions about productivity over time. So it's much closer than it was. And that's true of the ECI, which is the one that we got this week. It's true of average hourly earnings and compensation per hour too. So, and all of them are kind of saying that, which is great. And you have to look at a group of them because any one of them can be idiosyncratic in any given reading. So that's what you see. And so what you saw with the ECI reading was, if you look back it comes out 4 times a year. If you look back a couple of quarters, you'll see it was much higher, and then it came down substantially in June. And then the September reading was more or less at the same level as the June reading. So in a way, it's just validating that decline. And it was very close to our expectations internally, too. So I think we feel good about that. Also, I would say it isn't, in my thinking, it's not the case that wages have been the principal driver of inflation so far. Although I do think it's fair to say that as we go forward, as monetary policy becomes more important relative to the supply side issues I talked about and the unwinding of the pandemic effects, it may be that the labor market becomes more important over time too.
Nancy. You're up, Nancy.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, are you now as concerned about overshooting and raising interest rates too much as you are about getting inflation down to the 2% target?
So as I mentioned, I think for much of the last year and a half, the concern was not doing too much, not doing enough. It was not getting rates high enough in time to avoid having inflation expectations, higher inflation expectations, become entrenched. So that was the concern. I think we've reached now more than 18 months into this. You can see by the fact that we have slowed down, although we're still trying to gain confidence in what the appropriate stance is. But you can see that we think, and I think, that the risks are getting more balanced. I'll just say that they're getting more balanced. The risk of doing too much versus the risk of doing too little are getting more closer to balance, because policy is I think clearly restrictive at 5.25% to 5.5%. That range, if you take off a mainstream estimate of the expected inflation, take 1 year inflation, you're going to see a real policy rate that is, well above mainstream estimates of a neutral policy rate. Now that's arithmetic. It doesn't really. What the proof is really in how the economy reacts. But I would say that we're in a place where those risks are getting closer to being in balance.
And you said the proof is how the economy reacts. What are you looking at to be sure you're not overshooting?
Well, I think what we're looking at is, is inflation still broadly cooling? Is it sort of validating the path we saw over the summer, where inflation was clearly cooling and coming down? Now, we've seen periods like that before, and there hasn't been follow-through. The data have bounced back. So what are we seeing? Are we seeing, is inflation still coming down? So that's the first thing. Second thing is, in the labor market, what we've seen is a very positive rebalancing of supply and demand, partly through just much more supply coming online, and with labor demand still clearly remaining very strong. When you have the kind of job growth we've had over the last quarter, it's still very strong demand. So, and you see wage increases coming down, as we discussed, but coming down, in a kind of gradual way. I think we want to see that whole set of processes continue.
Processes. Is he just making up words today? He said a few kind of gibberish words.
Thank you. Brian Mena, CNN.
Processes is a word.
Do you think that has been any structural change in either consumption or in the job market that's pushing up consumption? You obviously saw the third quarter GDP figures, which were strong, and some economists have expected revenge spending to have fizzled out by now. So I'm kind of wondering if there's been any structural change in consumption.
I wouldn't say there's been a structural change in consumption. I would say it's certainly been strong. And so a couple of things. We may have underestimated the balance sheet strength of households and small businesses, and that may be part of it. There may be, we've been, like everyone else, trying to estimate the amount of savings that households have from the pandemic when they couldn't spend on services really at all, or in-person services. And, there can still be more of that than we think, although at a certain point we're going to be getting back to pre-pandemic levels of savings. We may not be there yet. So clearly people are still spending. The dynamic has been really strong job creation with now wages that are higher than inflation in the aggregate anyway. And that raises real disposable income, and that raises spending, which continues to drive more hiring. And so you've had that whole dynamic has been, and also at the same time, the pandemic effects are wearing off, so that goods availability, automobile availability is better, or was better. I think it still is. And from a business standpoint, there are more people to hire, and there's more labor supply. So the whole thing has led to more growth, more spending, and that kind of thing. And it's been good. And the thing is, we've been achieving progress on inflation in the middle of this. So it's been a dynamic. The question is, how long can that continue? And I just think the existence of this second set of factors at this time, which is the unwinding of the pandemic effects, that's what makes this cycle unique, I think. And we're still learning.
The cycle is different.
That took longer for that process to begin than we thought, and we're still learning about how it plays out. That's all we can do.
So to Daniel for the last question.
Thank you, Chair Powell. Daniel Avis from Agence France-Presse. Just a quick question following up on an earlier one. With regards to the Israel-Hamas conflict, the Fed's financial stability report said that Israel-Hamas conflict and the conflict in Ukraine pose important risks to global economic activity, including the possibility of sustained disruptions to regional trade in food, energy, and other commodities. You've had organizations like the World Bank warning of a possible surge in oil prices if the war spreads to other countries in the region. I'm just wondering how the Fed is monitoring these developments in the Middle East, You mentioned they are, and just what the potential economic impact could be if the conflict does spread to other countries in the region. Thank you.
I wouldn't want to speculate too much, but I'll just say so. Really the question there is, does the war spread more widely, and does it start to do things like affect oil prices in particular, since this is the Middle East we're talking about? The price of oil has really not reacted very much so far to this. As the Fed, as the Federal Open Market Committee, our job is really to understand the economy and the economic effects. And it isn't clear at this point that the conflict in the Middle East is on track to have significant economic effects. That doesn't mean it isn't incredibly important and something for people to take great, really important notice of. But it may or may not turn out to be something that matters for the Federal Open Market Committee as an economic body. But what the Financial Stability Report does is it calls out risks, and that's what it's doing, is calling out a risk of that. And the war in Ukraine, the same. War in Ukraine, did have immediately very significant macroeconomic implications because of the connection to commodities. So, thank you.
Thank you.
Thanks very much.
Ooh, Nelly. Thank you very much. With the FOMC, your crypto home. You guys are the best. We had 2,500 viewers. I'm going to assume we got 1,000 likes. That's amazing. You guys are amazing. I love you guys. What a day. We saw some wildly spicy price action during that. The decision was as expected. Pretty neutral outcome. Gold has returned to where the decision was made. Looks like it reclaimed support. The dollar looking rather crappy. Stocks kind of stealing the show here. Weirdly. Thank you for the hearts. Keep them coming. Stocks stealing the show here, breaking out of this higher high, lower low pattern. Unexpected. Maybe looking for a back test of that trend line at some point. Maybe that trend line isn't really placed right. I don't like that. I feel like I'm just fitting it. Stocks looking really bullish off of this. Bitcoin kind of undecided here. We noticed at the beginning, before the FOMC, we already had gotten the FOMC kind of volatility that we would have expected. Still kind of processing what that means. Bitcoin stuck here. I don't like multiple tests of 34.5 here in the short term, but gold holding support here. If we see it climb higher, maybe above 1982, I wasn't even born yet. Above 1982, likely Bitcoin to follow. Look for that as a leading indicator. GBTC doing kind of what we expected here. Faded out. We did get that little wick we doodled earlier. Crude taking a hit. Cardano in resistance. Pepe chilling sideways. Uniswap looking really good now. We looked at this earlier, breaking past the highs here outside of the descending broadening triangle. $5 would be the psychological and horizontal resistance that I'd be looking for here. That's looking maybe like it'll happen today. I said gold stole the show, or stocks stole the show. Not true. Solana stole the show for sure. Solana still moving higher during the stream. It has topped out at 46.81 for now, for this moment. It would be a little weird to see Solana not actually hit 47.30ish. Would be weird. Uniswap looking good. Ethereum trade going well, looking for 1908. Binance Coin, BNB, just still looks like shit. AVAX having quite a day. Looks like it's heading for its descending high trend here. It did break its high of October. That is a solid indicator. INJ up at 15 still. XRP honestly hit 61.8 cents, and I'm not actually sold. I'm not sold that it's done here. Not sold. Seems to be holding its gains better than we've seen in the past. There's been a bunch of alts we've looked at. Bitcoin, weekly golden cross, readied up for the first week of January. Keep your eyes peeled for a clickbait video about that in the future. I'm sure I'll make one. Let me see. And just keep these charts up. Stocks still going. Gold still going. Dollar still going down. Bitcoin still going up. We've had a ton of subscribers. What's up, Mr. Rubin? So Chang, Savablix, Varga, Raby, Tat, with a lot of A's, S. Magol, William Smith, We've had probably 100 subscribers here. I love it. If you're out there and you haven't yet, subscribe, join our Discord. We're live here all the time, baby. Updating you day by day. Live. In-stream trades, setups, analysis. Nobody delivers like we deliver. It's awesome. I smell some spiciness still. My voice is a little wrecked. Bitcoin may look to retest 35K again today. It is absolutely possible right now. It's interesting that the decision candle, we move that back. That decision candle. Is this it? Right about here. Pretty much the resistance previous. Now tested as support, but continues to be tested, so weakening. We don't have a higher high yet. That could change in just a few minutes. If not, back to that horizontal. It's weakened over and over again. Not a great look. Continuing that out to the left here. One sec. Got to get it perfect. My OCD won't let me not. Continuing that out to the left, this is looking like the point of contention or contestant. I don't know. I'm going to make up words like chirpow. Being very contested really all throughout this range. Very spicy. Very, very spicy. I'd like to see that hold. If you missed the beginning of the episode, I did some TA, some in-depth stuff. We set up a trade. It did not fill, but you're in the right direction. Make sure you've joined the Discord. Shout out to Femex, our sponsor. Sign up with them in the video description below, in the chat, guys. Whew. I'm going to give my voice a break, but we might be live again shortly. As soon as I end the stream, you know the whales jump in. So thanks for being here. We'll be live again, maybe today. Be in the Discord.